Coronavirus lockdowns emptied the streets around the New York Stock Exchange last year, but the virus didn't stop retail investors from piling into stocks.
We make investments morning, noon, and wait, what time is it exactly?
There's been a surge of interest in platforms like Robinhood, which allows any adult with a bank account and an internet connection to start trading. According to data from the Federal Reserve and JP Morgan, equities now make up 41% of US households' total financial assets, a record high.
And when you see stocks going up $20, $30, $40, $100 a day, it's going to attract attention. And that's what you saw. I mean, there was tremendous volatility, stocks moving up. All you had to do was jump in at any level, throw the darts, and you were up, up, up. And that's what a bull market is.
Wall Street and retail investors have been cashing in on that bull market, with the Dow Jones and the Nasdaq both climbing steadily since March last year. The Biden administration has already passed a $2 trillion coronavirus relief package and wants to pass another $4 trillion for infrastructure and jobs. With that massive stimulus and current market conditions, some Wall Street investors believe a stock market bubble is developing. For some analysts, though, that 41% figure isn't necessarily a sign that markets are overheating.
Only about 50 to 60% of Americans own stocks, and the vast majority of those are from retirement plans. Only a relatively small percentage of Americans actually own stocks directly. So actually, regardless, the allocation to stocks will increase for all Americans simply because the markets have been making record highs.
If there is a market correction on the horizon, retail investors who started trading during the pandemic could suddenly find themselves in a very different ballgame. Giles, Gibson for CGTN in Washington.